Hey guys, welcome back. I'm going to cover the stock market technical analysis. It's Friday, July 17th, 2020, and we're going to go ahead and just look at the general stock market, and then I'll look at a couple trade ideas, and we'll wrap up. Hope everyone has a great weekend. Let's get into it. All right, so the SPY, there's nothing really going on. I mean, pretty much all week, we've just been sideways. So the key takeaway really from this video for today that you need to just understand is there is a topping pattern that's in play. It's this island cluster top reversal. They, so far it hasn't confirmed. It broke down right here. So here's your sell signal. This is when we got our sell signal, and then it worked its way back up. And this is what's known as a stop raid, basically, or a potential stop raid. Or they're going to foil the reversal pattern. And that's the thing, is we just don't know which one it's going to be, because all week it's gone sideways. Looked like it was going to end right here. And I put out a video saying I think this is the top. And I still think that we're definitely near the top. And again, when I put a video saying, okay, I think this is the top of this rally, doesn't mean that it has to be that day, that the top has to happen that day. It just means that I think this range right up in here I don't think we're going to go much higher than this range. Obviously, I could be wrong. So all this information is just my own opinion, not trading advice. But so far, we've held that range, and we've just been chopping sideways. So looking at the daily here, you can see island cluster top right here, and we've just been chopping sideways. So we need some sort of a catalyst. The market doesn't want to go down without some sort of a catalyst. And it seems to want to continue to go up on kind of fluff news, I guess, like vaccine hope news, things like that. I mean, there's no real substantial data behind the news. It's just, they'll float out the word, positive vaccine results, and the market goes up on it. Because the market, is in desperate need. Obviously, everybody would like a vaccine, and we're in, that would be good news just in general in life. So the market obviously wants that too, but doesn't mean it's going to happen. So flipping over to the triple Qs. So we had this flagging pattern right here that was in play, and then we got the impulsive breakdown. We haven't got any follow through. There has been really no follow through. We've just been sideways ever since that breakdown the other day. And it's just the market doesn't want to go up, but it doesn't want to go down. It's just sideways. So there's really nothing that's changed. Ultimately, if you look at the bigger picture, we have a bearish engulfing, aka outside day, because an outside day, bearish engulfings or outside days are bearish engulfings, but at the same time, not every bearish engulfing has to be an outside day. Outside day is when you get the prices that basically are above the previous day's range and below the previous day's range, completely outside of the previous day's trading range. That's an outside day. And those typically are reversal candles. But then again, every single reversal candlestick, you always want to see confirmation. I mean, that is definitely kind of key. It doesn't have to be, confirmation doesn't have to play out the very next day. But what you want to see for confirmation is you want to see a nice big red impulsive candle confirming that reversal. And it doesn't have to be the next day, but you just want to see that before you start to see prices moving higher and erasing that reversal candle. So this is still in play because prices have not moved up, but they haven't moved down either. So we're just chopping around sideways. Maybe, I don't know if it's going to happen today, but maybe we have to wait till next week to see what happens. But in general, reversal candle is still in play, and we just have to sit there and wait for it. So nothing's changed. On the hourly, it's interesting. This might be playing out. Let me get rid of these little lines here. We might be getting a head and shoulders possible, where you've got this kind of shoulder action right in here. Here's your head. And then you've got this lower shoulder right there. So that we might be doing a head and shoulders pattern. And so watch for that. And that, if we can't move beyond this shoulder area right in here, we can't really go much higher, then that keeps this head and shoulders intact, and that also keeps this outside day reversal candle intact. If we start to break above it, it's going to negate the head and shoulders. It's going to negate, start to move up into here. You're going to negate the reversal candle, and it's just not ready to sell off yet. But if we get an if we break the neckline and we do it in an impulsive manner, maybe with a gap down, then that's going to confirm the head and shoulders topping pattern as well as this outside day reversal candlestick. So 2 things to watch for. We just have to wait to see if they're going to play out. I don't, nobody knows. I don't know. All I can do is read the charts and anticipate the probabilities. We have negative divergence in the PPO and the RSI intact, and we are, looking for that to play out. You can see it right here, like on the daily. There's your negative divergence. We also have it here in the PPO. It's a little harder to spot on the daily, but it's there. And lower and lower momentum is at play while we were making higher prices. Then we get the reversal candle, and now we look for the follow through. So that's really it on this one. Let's look at these sectors. XLV. This is an important one to watch just because it's the second highest weighted sector in the S&P 500 behind technology. So good to watch. Now we are getting a breakout here. You can see this is basically the top of the range that we were in. We were in this really long sideways range right here, and starting to break out above it. But here's the thing. It's a breakout on a Friday. You could say, if I roll down to the hourly, you could maybe say the breakout took place yesterday. But, here's the thing. The level keeps expanding. This level has gone from down here where we had lots of reactions. Then it overshot it. Then we went up to here, had several reactions. Now we're moving higher. So you could say the breakout took place yesterday. You could say here's your gap up, breakout, back test, and then we're running higher. So in general, it's a breakout. But let's look at the volume just to see what that volume looked like. You can see the volume's just not there. So again, breakouts, it's stocks can move higher on low volume or lower volume. That is not the argument or what I'm trying to point out. What I'm trying to point out and how you use technical analysis to help you is you look for breakouts on high volume to confirm the breakout. If you see a breakout and it's on low volume, it's not confirming that breakout. It says that the market is not, a big part of the market is not participating in the breakout. They don't believe it, essentially. And so if you have low volume days and you've got a small percentage of people buying something causing it to break out, it can break out. But when the major market participants start to react, they can easily take this breakout down and make a false breakout. So something to watch for. It doesn't mean it's going to play out, but what I see here is I see a breakout, rising prices on falling volume. All right, the last few days you've had lower volume, so you've got prices moving higher on falling volume. That is not what you want to see on a breakout. Also, you look at the RSI right here. We're up at 66, getting pretty overbought. This thing can go higher for sure. Can get up to 80 or so. But, we're starting to get in the range of being overbought. We have a breakout on falling volume there. And it's just not what you want to see for a breakout. So doesn't mean it can't stick. It's just not a high probability breakout. All right. Low probabilities sometimes play out though. So we'll keep an eye on that one. XLF, so financial sector, definitely important to watch. And not so much for its weighting in the, it's the third largest weighted sector, I believe, or maybe the fourth. But it's not as large of a weighting as it used to be, but it is the lifeblood of the economy, which is credit, which is lending and borrowing and consumer spending. Consumer spending makes up 70% of GDP. So where do consumers get that money? Well, they borrow it for the most part. That's basically how the American economy works. Americans don't really build up savings and invest. They borrow, and it's the same with our country. Our country essentially borrows and spends. So the banking sector is key, and it's important to see the health of the banks in order to confirm that the economy is going to be healthy. And the stock market will eventually follow the economy. It can be disconnected for short periods of time, but in the medium to long run, it follows the economy and the business cycle. So here's XLF. We're just walking up this trend line right here. You got this trend line. We undercut it a little bit. So this is interesting to me, though. Here's the thing that is a little suspect, I think, and there's a couple things I'm saying. One, this was a false breakdown right here. So bear trap, essentially, is what this was. So you saw the breakdown, and it was there, starting to break trend, and then they recovered it, created the bear trap. Although it wasn't that impulsive of a trap, because they gave the bears an opportunity to get out the entire time. Usually, for a nice bear trap, you want to see, or any kind of trap, you want to see a gap trapping that money in, not giving you an opportunity to exit. This didn't do that. But anyways, still a false breakdown. And you would think that when you have a false breakdown, there's a lot of shorts that are covering, and then the buyers see that it was a false breakdown and they pile in. And usually you get more impulsive of a move higher. We didn't get that too much. We just kind of broke back, recovered the trend line, and now we're just kind of treading the trend line again. And going back to the daily, this doesn't look very strong. It looks like we're just walking along the trend line, but there's no strength here. You can see we're just kind of holding right there, but we're not able to really move impulsively higher. It's just barely holding ground. So that's something to watch. Still above trend, and it's an objective area to go long. I mean, maybe down at the trend line, it's an objective area to be long, but it's just something that you want to watch for. So doesn't mean, I'm not interested in being long this because of what the SPY and the Qs look like. I think that, those will break down potentially, and then those will carry this down. And again, when you walk a trend line like this, you just don't expect to see, this is weak action. Yes, above trend, but barely. So keep an eye on that. What I'd expect to see is if it's not going to break down, I'd expect to see some sort of a gap up. Nice, strong, impulsive move off of this trend line. That's what it should do if it's going to remain bullish. And while I'm at it, I'll point out this Capital One, since I was looking at this the other day. And here's the trend line that I had marked out, 64.70. And as this thing, I pointed out yesterday or the other day, this bullish falling wedge, it broke higher. And I said, okay, this looks like it's going to run up to 64.70 and then it'll reject there. And then I've got this other trend line. So this is going to do one of two things. It's either this was it on the rally and this was as far as it's going to run and it's going to fall over, or you're just getting the initial rejection off of this resistance level, and then we're going to bounce, kick back higher up to the next resistance level around 67.20. One thing that's interesting though, as I zoom in, you can see 67.70, 64.70 was the kind of that resistance level, and it didn't quite get there. The seller stepped in early and sold it. You can see it right there. They sold it down. So that's weak, that's weak action in general. So we'll watch this. But yeah, it's clear it's rejecting, short of the level that I said, but still within the vicinity. So playing out as expected. Here's Tesla, just sideways. You could look at this one of two ways. You could say we are in a bull flag, and maybe here's your flagpole, and then you are just flagging out. Not the cleanest pattern. It's really kind of just this pattern, maybe something like this. So you could look at that and say that's what we're doing, or you could say that was the top, and we got a breakdown candle here. It's not really a bearish engulfing candle, and not really a reversal candle either. But it was obviously a reversal that day. Just doesn't make like a doji pattern. So maybe this wants to make another run higher. I'm out of it. I'm not trading it. For me, the trade was right here on this breakdown. I just took this breakdown all the way down to the gap fill, and I got out. And then really, it hasn't done anything since then. It's just gone sideways. So that was a good, I just sidestepped all this sideways action because it could go any way at this point, and I don't know. So I don't want to be in it. I don't see any signs that tell me it's going to go one way or the other. So for me, low probability setup for which way it would go. If I had to put money down, I'd say it's going to probably go down. But it's not concrete enough for me to make a decision. Let's look at some FAANGs real quick. Apple still holding bullish trend. Here's your trend on the hourly. You can see nice clean trend. So we'll just wait for this to break. We do have divergence here. Nice clean negative divergence. You can see it right there. So momentum is really dropping off, and price was continuing to make highs. And so we have that. And actually, this is not really negative divergence. This is actually playing out exactly. Prices are moving lower and the momentum's moving lower on that one. The negative divergence really was more in play back here. This is really the negative divergence. Sorry about that. Just want to keep it accurate. There's your negative divergence there. So as the price was moving higher here, this was signaling that the momentum is starting to fade in this area. And so this tells you, okay, momentum's starting to fade. Doesn't mean it's going to, still within trend, but now we're on lookout for break in trend. It doesn't make sense to buy at support or buy the dip when you start to get negative divergence. You can do that when you don't have it. Maybe down here it makes sense, but once you start to get negative divergence, it's saying momentum's fading, it's going to break, and then one of these times it should break. So now we're just waiting for that and watching for that. Still in bullish trend though. So Microsoft's starting to break down. Let's look at this one. This is interesting. So I had two trend lines I marked out. One comes from the March lows, runs up. You've got a tag of that trend line here, and then a little bit of reaction right in this area. You can see all the hourly candles, how it was walking along this trend line, and then a gap down where it broke. So that trend line has been broken and not recovered. We're seeing, you saw the selling, a little bit kickback rally, another impulsive candle down, a little kickback. That's bearish on that trend line. And then the secondary trend line right here, walking, you can see reaction here, reaction here. This candle, see how it undercuts, but it recovered it. It was down here on the open and closed above it. So that still confirms that that's a trend line. You can have undercuts of the trend line as long as the close is what matters. And then here is another reaction, and then again some more reactions right here, and then we've broken down from this one too. So if they don't recover this, then I don't see any other trend lines on this in the short term. I can keep drawing them out, something like this maybe, but the point is it looks like we're going lower, and this is a breakdown in one of the FAANGs. So you'll notice across all the FAANGs, they're all weak today. Let's look at Amazon. All right, Amazon, again, relative weakness today, down 1%, almost 1.5%, just continuing to sell off. So you're seeing the leaders starting to sell off, and that is not a good sign for the general market. So Amazon, you've got a little gap right here, and this is gap entry. Looks like it held gap entry. See the gap? Traders love gaps. It's something we can kind of mark off of and pivot off of. So that's why stocks react around gaps. But in general, still bearish. So it looks like we're at least going to come down to this trend line. So here's your trend line right down here, and we're heading right down there. But quite a bit of momentum. You look at how Amazon just lifted off this trend line. It just started to get out of control. It started to go parabolic. Well, those are blow off tops is what that usually does. When you start to lift off a trend line that impulsively and just start to leave it, well, then you get that's momentum, and when the momentum breaks, it impulsively comes down equally as strong. So we'll see. This might be enough downward momentum to pop this trend line and have this thing start to break down. Hasn't played out yet, but we'll have to continue to watch this. Google, again, head and shoulders, potential head and shoulders, still really is holding that, still looks good. Still within we're in the right shoulder part right now, and we haven't really negated that. So this still looks valid, and you look for a break of the neckline around 1486, and that would be a breakdown of Google. Okay, if you've hung around long enough on this video, then we'll cover some gold stocks. I know lots of people who have been following me for a while are interested in the gold trade, and I am myself. Doesn't mean I remain bullish forever. I think there's opportunities to buy gold stocks at cheaper prices, and that's kind of what I see right now. Here's the thing. Here's gold bullion. I don't see anything bearish in gold bullion. We're just flagging out right here on the hourly chart. We're just kind of running and just flagging out. But if you look at the weekly here, we're at major resistance, and I don't have it marked out apparently on this chart, but you can see right here it's about 1780, I believe, is the resistance. And there's your resistance on the weekly. Lots of rejections at this level from back in 2011, 2012. We ran straight up to it. We broke above it, but it's not that impulsive. It's not an impulsive breakout. You would want to see a breakout, and it's pretty overextended. We ran right up into it, and there's no impulsive breakout. So I think we probably fail. And, then I'm looking for lower prices, if there is a failure. I think we'll probably come down to something, before it was 1570. Maybe it's about 1650, somewhere right in there. We get some sort of a strong pullback down to a trend line right around here. I'll tighten up the chart as I'm able to see it, but that's what I see there on gold. Let's look at some of these miners. Here's Barrick. Okay, sorry, I had to take a call for about 45 minutes. So we'll pick back up here, Barrick Gold. And this is what I see right now. I see this upward trend line. I see it broken. This looks like we're starting to kind of back test. I think that it's going to pull back a little bit at least. So I'm watching it right now. The thing is that, yes, it is in a longer term bull market. Here's kind of the low of this bull market. And, you've got something that is lining up like this. It's not the cleanest, but, you're making an uptrend. Throw this out right here because this was the liquidation that took place. So you kind of want to throw that out because that's just forced selling. It's not, that was just forced selling during the big sell-off in March. And you can see we pulled back to here. So that's what I'd probably look for, is some sort of a pullback down to this 2350 or something like that. Agnico Eagle. These are just gold miners that I'm interested in following. This one, it's just riding up this support line right here on the hourly. You can see that it's just kind of riding up there. Broke down here, so it's getting a little choppy. On the daily, it's just not really going up. I mean, if we make a new lower low here, there's big support on this thing right around this level, about 57. We've seen that on the daily. See it, tag it there as support, undercut it, but still closed above there. Lots of support there. So a pullback down to 57, that's the area. Well, it's really more like 58, but that's the area that, you'd want to probably be buying this thing or adding to it. That's the support, the major support. So that's really all I see. I don't see, it's just sideways basically. We're not really going up, so we'll have to just continue to watch this. Now a break above the high here, and that would continue the uptrend that we've put in since the low here. But again, the chart's just not that clean. That's why I haven't been covering gold. They haven't been doing much. The gold miners, they've just been kind of sideways. They haven't really been going up too much. There's just not a lot of action. It's kind of flatlined. Gold bullion, going back to gold bullion here on the weekly chart, is at major resistance right here. So I'm looking for a pullback. I suspect that we get a pullback down to the trend line, maybe 1650, something like that. You could maybe even mark this out and say we get a pullback down to 1650. Those are the areas that you want to be. That's when I start getting more interested in gold, is when we pull back to support. But we've had a pretty good run in gold and gold miners, so looking for some sort of a pullback. That's my general thesis on that one. And that's all I got for the video. A little bit longer of a video, but If anything happens towards the end of the day, anything major changes, I'll put out another video. If we continue to go sideways, then we'll probably just keep this video as the week progresses, and that this will be our weekend review wrap-up video. Let me know what you guys are thinking. I appreciate the comments. I do try to respond to most of my comments as they come in. So thank you. Catch you on the next one.